Welcome back, everybody, to another deep dive. Today we're really getting into it with this one.
Oh, yeah.
We are diving deep into Howard Marks' The Most Important Thing, Uncommon Sense for the Thoughtful Investor.
That's a good one.
It really is. And this book, it's absolutely packed with wisdom.
Oh, yeah.
Just chock full of insights.
Page after page.
So what we're going to try and do today is really distill it down into the absolute key takeaways that you can use right away.
You know what makes this book so powerful?
What's that?
It's that focus on timeless principles.
I love that.
Marx isn't about chasing, the latest trends or the hot stock tip. He's about giving you a framework for navigating the market.
It's all about that solid foundation, right?
It is.
You got to have those fundamentals down.
You got it.
And one of the things that just immediately grabbed me when I started reading this was this idea of second level thinking.
Oh, yeah.
I have to admit, I'm probably guilty of a little bit of first level thinking myself sometimes.
I think we all are sometimes.
It's easy to just look at a company and say,
Yeah.
oh, they're doing great. They're killing it. Their stock's going up.
Buy, buy, buy.
Yeah. Buy. Let's jump in.
Right.
But Marx is saying, hey, wait a minute.
Hold on.
There's a whole nother level to this.
There is.
That most people just don't even consider.
Yeah. Most investors just don't get past that surface level.
Right.
But if you really want to excel, you got to move beyond just the obvious and think like the minority.
So what does a second level thinker do?
They're not just blindly following the crowd.
Right.
They're digging deeper.
Like a detective.
Exactly. They're asking questions like, what assumptions am I making here?
Yeah.
What are the potential downsides?
Oh.
What could happen that most people aren't even considering?
So it's really about challenging those assumptions.
Absolutely.
Looking at things from different angles.
Yeah.
But how do we actually put that into practice?
Well, it starts with self-awareness.
Okay.
Being aware of your own biases.
Okay.
We all have them.
Sure, right? We're human.
And then actively seeking out different perspectives.
Yeah.
Don't just read the headlines.
Don't just skim.
Right. Explore, go deeper.
Oh, wow.
And most importantly, think long-term.
Oh, that's so important.
Don't get caught up in the day-to-day noise of the market.
Yeah, it's so easy to do that.
It is.
But you got to zoom out and look at the big picture.
You got it.
And another thing Marx really hits on is this idea of risk. Now, I got to confess, when I think about risk, my mind immediately goes to, losing money.
Sure.
My investment's taking a hit.
Of course.
But Marx, he has a bit of a different take on it.
He does.
Doesn't he?
He does. And you've actually touched on a really common misconception about risk.
Oh, really?
Yeah, a lot of people think it's just about the possibility of losing money.
Right.
Like in the short term.
In the short term.
Yeah.
Like a little dip.
Yeah, exactly. But Marx argues that real risk is the probability of permanent capital loss.
Permanent.
Permanent. It's not about those short-term fluctuations.
Wow.
It's about avoiding investments that could wipe you out.
Like completely decimate your savings.
Exactly. It's not just about the ups and downs.
Okay.
It's about the potential for a catastrophic loss.
So it makes you think about your own risk tolerance a lot differently.
It does. Right?
Yes.
Like, how much volatility am I actually comfortable with?
Right. Are you okay with those big swings?
Yeah.
If it means potentially higher returns?
Yeah.
Or is preserving your capital the top priority?
Is it more important for me to just make sure I don't lose everything
Exactly.
than to, reach for those really high gains?
That's the kind of self-reflection that Marx wants us to be doing.
Right.
To really understand our own risk tolerance.
Makes total sense.
And then you can align your investments accordingly.
So if we're thinking about risk in this, new way, how do we actually identify and mitigate
those potentially devastating risks?
It all starts with thorough analysis.
Okay.
Don't just, jump into something because it sounds exciting.
Don't chase the hype.
Don't chase the hype.
Especially if it's promising crazy returns.
Right, exactly. You got to dig into the fundamentals, understand the business model
of the company
or the asset. Look at the competition.
Okay.
And really assess those downside risks.
So it's not just about looking at the shiny exterior.
No.
You got to look under the hood.
You got it.
Make sure that engine is sound.
Make sure it's all working right.
Yeah, it sounds like Marx is really advocating for a much more cautious,
he is,
more defensive approach
than
a lot of people probably take.
A lot of the, get-rich-quick schemes out there.
Right. He's not about chasing the next big thing.
No, he's about the long game.
He's about that margin of safety.
He is a big believer in the margin of safety.
What does that mean exactly?
So that means buying assets for less than their true worth, which gives you a buffer.
Oh.
In case things don't go perfectly according to plan.
Like a cushion.
Exactly. Think of it like getting a deal.
I like that.
So even if things go wrong, you're protected.
You're not going to lose your shirt.
Exactly.
I'm really starting to see how all of these ideas connect.
It all ties together.
It's not just about finding a good investment.
Right.
It's about understanding its true value.
Yeah.
And assessing the risks.
Hmm.
And making sure you're not overpaying.
And making sure you're getting a good deal.
It reminds me of one of Marx's most famous quotes.
Which one is that?
Price is what you pay.
Yeah.
Value is what you get.
I love that one.
He really drives home that distinction.
He does.
Between those two things.
And for good reason.
Yeah, because they're not the same.
They're not the same.
Price is just what the market is asking for something right now.
Exactly. It's what's on the sticker.
Right.
But value,
yeah,
that's what that asset is truly worth.
Based on, its fundamentals.
Based on its fundamentals, its earning power, its future prospects.
So how do we actually go about, figuring out that true value?
That's the million-dollar question, isn't it?
It is.
It definitely takes some work.
Yeah.
And a good understanding of what you're looking at.
Yeah.
But the key is to look beyond the hype.
Okay.
And focus on those fundamentals.
Okay.
You want to know if that price you're paying
Yeah.
is justified
Yeah.
by the potential for future growth and earnings.
Yeah.
That's what it all comes down to.
I see. Does that make sense?
It does.
Okay, good.
I'm following you.
So that's where those real bargains come in, right?
Yeah, like when you're getting something on sale.
Exactly.
Marx thinks those opportunities
Yeah.
really happen when the market is down.
When everyone's freaking out.
Yeah, like when fear and uncertainty just drive those prices down.
People just start selling everything.
And that's when having that contrarian mindset.
That's when it pays off.
Can really pay off. Yeah, think about the 2008 financial crisis.
Oh, yeah.
While a lot of people were panicking.
Right.
Selling everything they could.
Yeah.
Mark's firm Oak Tree Capital. They were buying.
Oh, wow.
They were scooping up all that distressed debt.
That's gutsy.
Well, they recognized that the market had just overreacted.
Yeah.
And that this was like a once-in-a-lifetime chance.
Oh, wow.
To buy valuable assets at a huge discount.
So they were totally going against the grain.
They were.
That takes some serious, courage.
It takes conviction.
Yeah, you really got to believe in what you're doing.
You got to do your homework.
Yeah.
And they understood the value of those assets.
And they just figured eventually the market would catch up.
Yeah, they knew that over time.
Uh-huh.
The market would recognize that value.
That's a great example of, the importance of understanding market cycles.
Absolutely.
Which Marx talks about all the time.
All the time. And it's not about, perfectly timing the market.
Right.
Or riding those waves up and down.
It's about knowing where you are.
Exactly. Understanding where we are in the cycle.
Yeah.
And then making decisions based on that.
So when everyone's super optimistic.
Yeah, when prices are sky high.
You got to be a little cautious.
You got to be a little careful. You got to ask yourself, is this sustainable?
Yeah.
Is this going to last?
Is this a bubble?
Yeah. Is the market getting ahead of itself?
Because that's when those first level thinkers can get burned.
Yeah, they get caught up in the hype.
Yeah, they FOMO right into it.
They do. And, Marx would say,
yeah,
when everyone's greedy, be fearful.
I like that.
Right.
It's the opposite of what everyone thinks.
And the opposite is true, too.
Okay.
When everyone's fearful,
yeah,
that's when the real opportunities come up.
For those who can see the long game.
For those who can think long term.
Yeah, so Marx is saying be a contrarian.
Well, he's not saying be contrarian just to be different.
Right.
It's about recognizing when the crowd is wrong.
Oh, okay.
When they're overreacting.
Okay.
Or underreacting.
Yeah. To something.
To information, to an event.
So you're not just blindly going against what everyone else is doing.
No. You have to have a reason.
You've done your own analysis.
You've done your research. You've looked at the data.
And you have conviction.
You got to have conviction in your assessment.
So it's still about managing risk.
Oh, absolutely. You're not just throwing caution to the wind.
Right. You're just willing to stand apart from the crowd.
Exactly.
Yeah.
And be okay with being wrong sometimes.
Yeah. Nobody's right all the time.
Nobody is.
One thing Marx talks about a lot is this idea of defensive investing.
Right.
This idea that protecting your capital is just as important as growing it.
It is.
It's like that saying, offense wins games, but defense wins championships.
Oh, I love that analogy.
And that's what Marx is all about.
It is.
He's all about not losing money.
Minimizing those losses.
Yeah, minimizing the chance of wiping out your savings.
Exactly.
So he's not saying don't try to get good returns.
Yeah.
But he's saying make sure you protect what you've already earned.
Protect your principal.
So what does defensive investing look like?
Well, It can look like a lot of things.
Okay.
But one common approach is to allocate some of your portfolio to those less volatile assets, like high-quality bonds or dividend-paying stocks from those solid companies.
So they might not go up as much.
They might not have that explosive growth, but they provide a stable base for your portfolio.
Right.
And they can cushion you during those downturns.
It's like having a diversified team.
I like that.
You got your offensive players, you got your defensive players.
You got to have both.
They all have their role to play.
Exactly. And the exact mix depends on you.
Okay.
Your risk tolerance, your goals, your time horizon.
So it's personal.
It's very personal.
But the underlying idea is the same.
It's the same.
Protect your capital.
Protect it.
Minimize the downside.
Minimize it.
And then look for opportunities to grow over time.
The long game.
I really like how Marx always emphasizes that long-term view.
He's not about getting rich quick.
No.
He's about building wealth sustainably.
It's about having the discipline and the patience.
To weather those storms?
Yeah, because they're going to come
They are.
and come out stronger on the other side.
That's the goal.
I feel like I'm getting a lot more confident.
That's great.
Just from like thinking about my own approach.
That's what it's all about.
As we've been talking about all this stuff.
Knowledge is power.
It is. And it's empowering to understand these principles.
It helps you make better choices.
Yeah, and avoid those pitfalls.
Those traps that people fall into.
And the best part is...
What's that?
This isn't just about investing.
No, it's not.
This is about life.
It's about making better decisions in all areas.
Yeah, whether it's your finances, your career, your relationships.
It all applies.
So as we're wrapping up our deep dive into Howard Marks' The Most Important Thing.
What have we learned?
Yeah, what are like the big takeaways you want listeners to remember?
First and foremost, remember second-level thinking.
Yeah.
Don't just follow the herd. Think for yourself.
Challenge those assumptions.
Absolutely dig deeper.
And don't forget about risk.
Oh, yeah. Risk is always there.
It's not just about those little dips.
No, it's about losing it all.
So manage it carefully.
Carefully, and always remember price versus value.
Yeah.
Successful investing is about finding those discrepancies.
Yeah, where the price is way lower than the real value.
Exactly.
Yeah.
You're looking for those deals.
And patience is key.
Patience is key.
The market moves in cycles.
It does.
We got to understand where we are in those cycles.
And adjust accordingly.
And sometimes that means being contrarian.
Sometimes it does.
Sometimes you got to go against the grain.
When everyone else is panicking.
Or getting too excited, exactly. I feel like Marx has given us this amazing toolkit to become better investors.
More thoughtful, more disciplined.
And ultimately more successful.
That's the goal.
And the great thing is, like we said, these principles apply beyond finance.
They do.
They apply to life.
They do.
Man, that was quite a journey.
It was.
Through the most important thing.
So much good stuff in there.
Really is. I feel like I've got like a whole new perspective on investing.
That's great.
And just like decision making in general.
Yeah, it's not just about the money.
It's not just about the money. It's about life.
It's about how we think.
Yeah, how we approach problems.
How we approach risk. How we think about the future.
You know, before we wrap up, I'm curious.
Yeah.
If you could ask Howard Marks one question, just one question about investing today. What would it be?
Ooh, that's a good one.
Yeah.
Let me think.
Take your time.
I think, given how much the world has changed, even since he wrote this book,
right?
I'd want to ask him about technology.
Oh, interesting.
Like, what does he think about the role of technology in investing today?
Yeah.
Algorithms, artificial intelligence, big data.
Yeah, it's changing everything.
It's having a huge impact on the markets.
Right.
So I'd want to know how investors can navigate this new landscape.
Yeah, that's a great question.
Yeah, like, do these timeless principles still apply?
Right.
In this new world of, like, supercomputers and algorithms.
It really makes you think.
It does.
How do we adapt?
Right? Because the markets are constantly evolving.
Yeah.
And we have to evolve with them.
So for our listeners out there who are ready to take action, what's the best way for them to get started?
Well, first things first.
Okay.
Go get yourself a copy of The Most Important Thing.
It's a must-read.
It's a must-read.
Read it carefully, take notes.
Highlight.
And then actually put those principles into practice.
Yeah, don't just read it.
Yeah.
Actually use it.
Take action.
It's not about memorizing concepts.
Right.
It's about internalizing them.
Making them a part of who you are.
Yeah, it's about developing that uncommon sense.
That Howard Marks talks about.
Exactly. It's about seeing the world differently.
Yeah.
And making smarter choices.
I think we've really unpacked a lot here today.
I think we did a good job.
It's been great exploring all these ideas with you.
Likewise.
And to all our listeners out there.
Yeah.
Thanks for joining us on this deep dive.
We appreciate you.
We hope you've gained some valuable insights.
And that you're feeling empowered.
To navigate the world of investing.
With confidence and clarity.
Keep learning, keep questioning.
And keep diving deep.
Until next time.
Yeah.
This is the Deep Dive signing off.